Today we'll start with the new chapter, income under the head capital gains. Now, what is this capital gains? We have to understand. But let's start with the basics of charge, that is section 45. First thing it says that there must be a capital asset. Now, in your language or in my language, commonly what we know, the fixed assets are there like plant and machinery, building. We call that only as capital assets. We believe that, right? So let us believe the same and continue. Okay, so there must be a capital asset. It must be transferred. So these capital assets are there, na? Land, building, plant and machinery, right? These are capital assets. It must be transferred. That means sold from one person to another person. And after the sale, obviously either there will be profit or there will be a loss, right? There should be some profit or loss, and this should happen in the previous year. Now let's see what are the 4 conditions under section 45. Basics of charge, 4 conditions only. First one, there must be a capital asset. Second one, it must be transferred. Third one, you must get either profits or losses from such transfer. And last one, all this should happen in the previous year, right? If this happens, then we will tax such income under capital gains. And for loss also there are some adjustments which we'll do when the next chapters come. We'll learn what to do. Okay, but presently basics of charge, what is it? There must be a capital asset, it must be transferred in, and you should earn profits or get losses from it, and this should happen in the previous year. If this happens, then it will be taxable in the previous year. That's okay. But the point is, what is a capital asset, right? And why we should learn these conditions actually. 4 conditions are important. Why? Because I'll tell you that if you don't know the conditions for charging a particular income under particular head, then you may charge the income under wrong head. Correct? So that's why we should know the conditions, and that's why I repeated it so many times. Now, the first condition says under section 45 that it must be a capital asset. What is a capital asset? So capital asset is defined under section 2 clause 14. It is defined under section 2 clause 14. What it says property of any kind is a capital asset. Property of any kind is a capital asset. When they say any kind, it means the property can be movable or immovable. Like immovable being building, correct? Land, movable may be plant and machinery, jewelry, so gold, right? So property of any kind, whether movable or immovable, tangible or intangible. It may be building, plant and machinery. It may be intangibles like goodwill, patent, copyright. So it can be movable, immovable. It can be tangible, intangible. It can be used for business or not used for business. Suppose Anil Ambani is actually facing a lot of financial crunch. So he sold his corporate office. So that building was used for business. Another example, we sold one of our buildings because we wanted to shift to another place. So what happened? Here that building which we used was for residents. So what we learnt with this? The point number 1 in the definition of capital asset. Capital asset includes, the first point says, property of any kind, whether movable, immovable, tangible, intangible, used for business, not used for business. Clear? Very good. Now any kind, they said, huge scope is created, right? Anything can be taxed under capital gains chapter, because they said property of any kind. Now come to the second point. This point actually came because of lot of politics which happened. Foreign institutional investors, they invest in stock markets in India. Now if they are holding shares or securities as per the regulations of Securities Exchange Board of India, then the shares or securities held by that FIIs, foreign institutional investors, is a capital asset. Lot of politics. I'll tell you what happens. Generally, if suppose I am holding the shares, if I continuously sell, buy, sell, all these things continuously I do, for me the shares will become stock in trade and it will be taxable under PGBP, right? Profits and gains of business and profession. If I hold the shares for long term purpose, then it will become a capital asset for me, taxable under the chapter capital gains. Now for me and for all the Indians, whether individuals or companies or HUF, this rule applies. But for FIs, special rule made. Yes, during Congress time it was made that any foreign institutional investor holding securities as per the regulations of SEBI, the shares and securities are capital assets. Now think about, foreign institutional investor is a company normally, correct? For them, if the income is taxed under PGBP, 40% they have to pay tax. But if it is taxable under capital gain, only 10-20%. If it is long term, 10%, short term, 20%, 15% only. So to favor them, this provision was brought. And it is still continuing. Of course, we want investments into India, right? So we are continuing with that provision. But it's unfair on all of us, correct? So the second point talks about that any shares, securities held by foreign institutional investors as per the regulations of Securities Exchange Board of India is a capital asset. Okay? Even if these FIIs are trading in the shares, regularly buying, selling, all that they may be doing, but they will pay tax under capital gains chapter only, not under PGBP. Come to the third point. Third point talks about ULIP, Unit Linked Insurance Policy. Now many of you don't know what is ULIP, so I'll tell you in simple language. Hey, why we take life insurance? Tell me why you take life insurance. Simple reason is, suppose the person who is earning income dies, then how will the family survive? How money will be, they will be earning the money? Difficult, correct? So people take life insurance. Suppose I have taken 1 crore life insurance and suppose tomorrow I die, then my family will get 1 crore rupees and that would be sufficient for them to survive for some long period. So that's the purpose, to financially secure the dependents is the purpose of insurance. But unit linked insurance policy serves not only the financial protection to the dependents but also investment to the person who is investing the money. Like I took a Kotak insurance, it was a ULIP. So every year I will pay 20,000 rupees for continuously 10 years. And after the 10th year is over, I will not pay any single rupee to Kotak. And in the 15th year, they will pay me 3,60,000 rupees. What did we understand? That it is, dekho, if suppose in this period, if the person who took the policy dies, the family will get 3,60,000 rupees even without paying all the premiums. Directly they will get 3,60,000. But if the person don't die, then the person himself will get the money at the end of 15th year, 3,60,000 rupees. So this is the concept of ULIP. So it is investment where you can earn some profits plus life protection. That means financial protection to dependents. Okay, this is ULIP. Now, in the past times, ULIPs were not at all taxed much. But government said supporting middle class or lower middle class is great. But why should rich people we should ignore and not tax them? Why we should not collect from them? So obviously we should collect tax from them. So government said that if you are actually paying 2,50,000 rupees or more, how much? 2,50,000 rupees or more in any single year, in any of the years during the policy period, then that ULIP will be taxable. That ULIP money will be taxable when you get. Okay? And that's why they said that it is a capital asset. Government don't want to tax huge money. They want to just collect 10-15%. For that purpose, they put it under capital gains chapter. Clear? So in simple language, you always remember, if it is a unit linked insurance policy and the premium paid in any of the years, in all the years, each year you check, is more than, in any single year, is more than 2,50,000, then only ULIP is a capital asset and taxable. If in all the years you check, it is less than 2,50,000, less than 2,50,000, less than 2,50,000, then it will be exempt under section 10, subsection 10D. Exempt under section 10, subsection 10D. More details we'll discuss when that topic comes here. But as of now, please remember that unit linked insurance policy is a capital asset. So what I said till now, please remember, I spoke about capital asset. Section number 2, clause 14. What it says? Property of any kind, whether movable or immovable, tangible, intangible, whether it is used for business, not used for business, is a capital asset. Second thing, any securities held by foreign institutional investors as per the regulations of Securities Exchange Board of India. Third point is unit linked insurance policy is also a capital asset if in any single year the premium paid is more than 2,50,000 rupees. That's it. Capital asset meaning understood. But what happened? In many years back, in 2012, when Pranav Mukherjee was the finance minister, Idea Vodafone deal completed. And they escaped taxes by saying some using the loopholes of Indian law actually. So talking about it is now useless because there are a lot of changes and whatever happened in the past is a dark history. It is closed today. But the law which Pranav Mukherjee brought, that I will tell you, that if suppose in foreign country there is certain transaction happens between two different organizations, and because of that transaction in foreign country, the management rights, control rights of any business is shifted to any other person, then such a transaction outside India is also considered as property and will be taxable to capital gains. Chalo, for you I'll explain with Vodafone example only. Okay, but later on government gave all the tax money back to the Vodafone company. Simple reasons to maintain international relations well, right? Hey, you first to make the law and after that something happens, you punish accordingly. But something happened first and then you make the law is wrong, correct? That happened in 2012. Anyhow, whatever happened, I'll tell you simple language. There was a company called as Hutch, right? Hutchison SR is their company, and there is a company called as CCP Limited actually, and there is a company called as Vodafone. So what happened, that United Kingdom's Hutch SR company sold all the shares of CCP Limited to Vodafone company. Okay. Now Vodafone became the owner of CCP Limited. That company is in Hong Kong, China. Now the point what happened, CCP Limited had major control in Indian Hutch, right? Hutch dog you would have seen. Now because Vodafone purchased CCP in China, it became the owner indirectly for Hutch company in India, and the transaction was thousands of crores, and government did not get any single rupee. So that's why government was very angry. They made the law. The law is very clear. Now what happened? Hutch company of UK sold all the shares of CCP in China, company in China, to Vodafone. Now where the transaction happened? Outside India. But Vodafone became the owner of company in India. If these things happen today, it will be taxable in India under the head capital gains. Clear? Very good. Now what happened to Vodafone? It went to all international courts. Finally, Indian government won the case against Vodafone, but Indian government, as a goodwill gesture to actually protect the interest of all the investors and build trust in our Indian governments, we gave all the tax money back to the companies, because at that time such law did not exist. But today if same transaction happens, it will be taxable. Okay, so what did you understand? Simply, if because of any transaction in foreign country, any agreement in foreign country, because of any contract in foreign country, if management rights, control rights in an Indian company is shifted from one person to another, one entity to another, then such contractual consideration is taxable under the head capital gains. Clear? Now come to the exceptions. We understood 3 points, right? Capital asset under section 2 clause 14. It means first one, property of any kind, movable, immovable, tangible, intangible, for used for business, not used for business. Second one, securities held by foreign institutional investors as per the regulations of SEBI. Third point, what I said, third point, ULIP, if in any single year the premium paid is more than 2,50,000. And fourth point, we discussed that management rights or control rights in a company in India is transferred to another entity because of a transaction outside India. Then that transaction, that transfer of management rights is treated as capital asset, treated as transfer of capital asset, and taxable in India. Now, certain things are not capital assets. Right? Property of any kind doesn't mean that a trader is there who is selling all the goods in his shop should be taxed under capital gains, correct? So that's why some exceptions are there. So first one, stock in trade. So stock in trade means raw materials also. Stock in trade means consumable stores also. Stock in trade means inventory, right? Raw materials, consumable stores, inventory, stock. Because when you buy sell stock, it is a business, and if you earn business income, it should be taxed under PGBP, correct? That's what we should understand. Now because we said capital asset means property of any kind, that means stock in trade is also correct. So that's why it is kept in exceptions. So stock in trade is not a capital asset, because the income from it is taxed under PGBP chapter. Come to the second point. So stock in trade is not a capital asset. Consumable stores, raw materials are not a capital asset. Come to the personal effects. Actually, I should have written movable personal effects. So if there is any movable personal effects, it is not a capital asset. I'll tell you in a practical way. Chalo. Suppose I am having a watch. I I have a wrist watch or sports watch or whatever type of watch it is. Smart. I don't know how many types of watches are there. Chalo, anyhow, I have a watch. I have a pen. I wear a shirt. I wear sandals. So now these are all used for personal purpose, correct? I have a bag which I carry to colleges where I take classes. So these are all personal effects and these are all movable, correct? So movable personal effects are not capital assets. Okay? So it includes wearing apparel, it includes watch, right? So everything which are used for very personal purpose. But when I said movable personal effects, I directly said that building, even though you use it for residence, is not a movable personal effect. So if you sell the building, it is taxable. If you sell your shirt, if you sell your pen, if you sell your bag, if you sell your sandal, it is not a capital asset, not taxed. But if you sell building, it is a capital asset, it will be taxed. Okay? If suppose, then people try to escape taxes by actually doing many gimmicks. So government had to introduce one more provision, that 6 items we are going to tell, they are not capital assets. What are they? 6 items I am going to tell, they are not personal effects. 6 items we are going to tell, they are not personal effects. What are they? Jewelry. I'll discuss about it in detail, don't worry. Jewelry, first one. Second one, archaeological collections. First one, jewelry. Second one, archaeological collections. Third one, drawings. Jewelry, archaeological collections, drawings, paintings, sculpture, work of art. Okay? So 6 things we should remember like this. Chalo, I am repeating with you. Jewelry, archaeological collection, painting, drawing, sculpture, work of art. These 6 things are actually very precious. Right? They can be sold for huge premiums. You may be knowing that Yes Bank was forced by Priyanka Gandhi to purchase her painting for 2 crores rupees. The bank was not interested, were forced by political pressure. And there are many people who do wonderful paintings and they are sold for crores of rupees, not the rubbish one which was actually sold. Okay, so paintings can be sold for a premium price, right? So again I am telling, jewelry, drawings, paintings, sculptures, work of art, archaeological collections. These 6 are actually have premium value. They can be sold for profit and that's why they are not kept under the definition of personal effects. So they are not personal effects. If they are not personal effects, then automatically they become capital assets. Clear? Now, why government said that personal effects is not capital gain? If somebody is selling his shirt and earning money, what is the problem government has? If somebody is selling his sandal and earning money, what government has problem? They said it is not a capital asset. They should have said, right? Government is fool. What do you feel? They could have collected tax on this. But they are fools. What do you feel? Is it right? Absolutely wrong. Suppose you purchase one shirt, suppose maybe for 1000, 2000, 3000 rupees. If you are selling it for second hand, you will get profit or loss. If you are selling your sandals or pen for second hand, you will get profit or loss. obviously you will sell for less than the purchase price, correct? And when you get loss, you will claim the benefit from the government, and government actually don't want that, right? There is a chapter called as set off and carry forward of losses. In that chapter, what government said, that whatever income you get from that, related losses or any other losses, you can deduct. So what we could have done, wherever we got gains minus this loss of personal effect, loss because of personal effect, we could have deducted, and then we would have paid very less taxes to the government. So government said, nah baba na, we don't want this to happen. And that's why government, for its interest, protecting government's interest, government said movable personal effects like wearing apparel, watch, pen, sandal, right, which are for personal use, are not capital asset. And where government where you can sell at more price and get profit, like jewelry, it is also personal, right? Women wear, many men also wear gold chains, right? Gold rings. So that should also have been said personal effects. But government said no, here we have a chance of profit, yaar. How can we skip like this? So basically jewelry, archaeological collections, drawings, painting, sculpture and work of art can be sold for premium, can earn profit out of it. So that's why it is not personal effect, it is a capital asset. Now, painting, drawing, sculpture, archaeological collection, work of art is very simple to understand. But what is jewelry? Suppose Nakli jewelry is there. Can we call it as jewelry? Something, some chain we can purchase for 100 rupees, 50 rupees. Can we call it as jewelry here? The answer is no. Jewelry is defined in point number 3 actually. Jewelry means ornaments made up of gold, silver, platinum or any other precious metal. Oh, only costly things, right? You should understand. Gold, silver, platinum or any other precious metal. Right. So jewelry means any ornaments made up of gold, silver, platinum or any other precious metal, or maybe an alloy mix of some metals. It's all okay, but it is a capital asset, not a personal asset. Oh, personal effect. Okay, I'll tell you. If suppose a jewelry embedded into the wearing apparel, sometimes it happens, right? Many rich people, if you think about Ambanis or such type of rich people, they totally wear golden clothes also when some event is there. Totally, the dress is sewn into by diamonds and gold and something like that. So that wearing apparel in which gold or diamonds and precious metals are sewn into, that wearing apparel is also called as jewelry. Suppose example, tomorrow we feel that our Prime Minister, the respected Prime Minister, the Speaker of Lok Sabha, should sit on a golden chair, and a golden chair is created for them, totally embedded with jewelry, right? Diamonds. The power of India should be seen, right? The glory of India should be felt, right? For that we decided like this. Now that furniture is also jewelry. Okay? Understood? Very good. This way we should understand the definition of jewelry. So what we understood? Hey, capital asset we understood, but stock in trade is not a capital asset. Movable personal effect like our clothes, bag, watch, pen is not a capital asset. But jewelry, archaeological collection, painting, sculpture and work of art are capital asset, not personal effect. Come to the fourth point. There is third point only, but yeah, in the book fourth point. You can see fourth point. Now what it is? Yeah, rural agricultural land in India. Why I am telling slowly these words? Because every word has a point to remember. First thing, is urban agricultural land not a capital asset? Urban agricultural land is a capital asset. Because when I said that in the exceptions, point number 4, I said rural. If it is rural, then it is not a capital asset. But if it is urban, it is a capital asset. If it is agricultural, then it is not a capital asset. But if it is non-agricultural, then it is a capital asset. If it is in India, then it is not a capital asset. If it is outside India, it is a capital asset. So that's why all these 4 keywords like rural, agricultural, land in India, okay, you should remember. If it is rural, agricultural, land in India, it's not a capital asset. Now the question comes, what is a rural area? What is rural area? Tell me first. Rural area is basically an area which is not an urban area. Wah, Sarji, wah. And if I ask you, what is urban area? Which is not a rural area. Wah, 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 wah. Wonderful. It is not like that. Rural area is an area which is not an urban area, okay. But urban area, there is a proper definition. What it says, hey, urban area is something which is covered by municipality, municipal cantonment, town area committee, Mahanagar Palika, right? Like these words will be used, but ultimately, if there is a proper municipality and if any area falls in the municipal limits, then it is an urban area. And obviously it has a population of 10,000 or more. So municipal cantonment board, municipality, municipal corporation, town area committee, right? Such words are used. But if it has a population of 10,000 or more, it is an urban area. But today, slowly but surely, or even faster we can say, rapid urbanization is happening. So to cover the suburban areas also, they brought some more laws. Suppose a particular area don't fall in the municipal limits, but that area has a population of 10,000 to 1 lakh. Then you should see it is how much distance it is from municipal limits. If it is up to 2 kilometers from municipal limits, then it is also urban area. Again I am telling, see, is it covered by municipality? If the question is this and your answer is yes, then obviously it is an urban area. Obviously 10,000 or more population will be there, yaar. Right? But next time again I will ask the same question. Is it covered by municipality? If I say no, is it rural area? Not at all. Wait. Then ask one more question. If it is not covered by municipality, then ask one more question. What is it? What is the population of that area? Sir, 10,000 to 1 lakh. Okay. What is the distance from the borders of municipality and to that area? Sir, it is just 1 kilometer. Oh, is it within 2 kilometers? Yes, sir. Then it is urban area. Sir, but this area has a population of 1 lakh to 10 lakh, sir. Okay, then it is how much distance from urban area or from municipal limits? Sir, it is just 5 kilometers. Okay, if it is falling within 6 kilometers, then it is also urban area. Sir, if the population is more than 10 lakhs, then up to 8 kilometers from municipal limits will be treated as urban area. So we have to satisfy two conditions. If two things are ticked, yes, yes. Is population between 10,000 to 1 lakh? Yes. Is it within 2 kilometers from the limits of municipality? Yes, it's an urban area. Is the population of that area between 1 lakh to 10 lakhs? Yes. Is the area within 6 kilometers from municipal limits? Yes. Then it's urban area. Is the population more than 10 lakhs? Yes. Is it within 8 kilometers from municipal limits? Yes. Then it's urban area. Like this you should understand. Okay. Clear to all of you? Very good. Now, I said that rural agricultural land in India is not a capital asset. So that means rural agricultural land in India is not a capital asset. Suppose there is a land in rural area, but it is not used for not used for agricultural purpose. There is a land in rural area, village only. It is used as a sports ground. Chalo, let's assume it's used for sports. Right? Now it is not used for agriculture. So if we sell that ground which is used for cricket or for kabaddi, not for agriculture, then will it be called as capital asset? The answer is yes, it will be called a capital asset. Because 4 conditions are compulsory to say it is not a capital asset. What are the 4 conditions? Rural, first condition. Agricultural, second condition. Land, third condition. Fourth, in India. Okay? If in rural area also it is not used for agricultural purpose, that land will be capital asset. In rural area, if it is a building, then also it is a capital asset. If suppose it is a rural area, the land is used for agricultural purpose, but the land is in Bangladesh or maybe in Afghanistan or maybe in United Kingdom, then it is a capital asset. So 4 things to remember. 4th point, 4 points. Rural agricultural land in India is not a capital asset. And we understood the definition of urban, and whatever is not urban is rural. Please remember. Okay. Now, gold deposit certificates 1999 actually, or gold monetization scheme 2015, if there are any gold bonds under these schemes, they are not capital assets. Right? If there are gold deposit certificates 1999, or if there is a gold monetization scheme 2015, under that any gold bonds are issued, that gold bonds are not at all capital asset. And these bonds are issued by actually government of India. When government issues that bonds, government said it is not a capital asset. That means if you sell these bonds, will capital gains will be charged on it? The answer is no. No capital gains will be charged. Okay. Now on these bonds, government will pay interest to you. That interest is also exempt under section 10 subsection 15. That interest is also exempt under section 10 subsection 15. Clear to all of you? Very good. Now I'll ask you certain questions. Tell me and let's check that how much clarity you have. Suppose if I have taken a life insurance policy, normal life insurance policy, term policy, right, without any investment, right, there is no unit linking here, only life insurance policy. Is it a capital asset? The answer is no. Only unit linked insurance policy is a capital asset. Okay. Now if suppose I'll ask you one more question. Personal effects are sold by me, then will capital gains be charged? The answer is no. Modi ji sells personal effects. Huge price, yaar. Modi ji's coat was purchased for 4 crores rupees by one Gujarati businessman. And ultimately whatever money he gets, uses it for many girls' marriages. So he donates it. He don't keep anything with himself. Now, when Modi ji sells the coat for 4 crore rupees, is it a capital asset taxable? Personal effect is personal effect, right? Whether Modi ji use or I use, so it is not taxable at all. Correct? Now, jewelry, not a capital asset. Wrong answer. It is a capital asset. Gold biscuits. Now asking a question, gold biscuits. Is it jewelry? Answer is no. You don't wear gold biscuits in your neck, right? Sir, gold biscuit का चेन बनाया. चेन तो बना सकते यार, बट गोल्ड बिस्किट तो टंगा के तो नहीं घूमते ना गले में, राइट? सो गोल्ड बिस्किट इज नॉट a ज्वेलरी. So is gold biscuit a capital asset? Sir, no, gold biscuit is not a capital asset. Absolutely wrong. Gold biscuit comes under the definition of capital asset because property of any kind. So gold biscuit is a property of any kind. So in the general points, it is a capital asset. Okay. Gold bricks are also same. Diamonds like ruby, they are also capital assets. Are you able to understand what is capital asset? Clear? Chalo, I'll remind you what is not a capital asset. Simple. Stock in trade is not a capital asset because it is taxed under PGBP chapter. Movable personal effects is not a capital asset because it is loss making. Government don't want to actually get less taxes. But jewelry, archaeological collections, painting, drawing, sculptures, work of art is a capital asset even though they are personal in nature. Rural agricultural land in India is not a capital asset. And gold deposit certificate, gold bonds or gold monetization scheme is not a capital asset. And on that any interest is there, that interest earned is also exempt under section 10 subsection 15. And one more thing, we know what is rural and urban now, right? With this we completed the definition of capital asset.